Lemonade stock has been on an absolute tear. 3 days in a row, we've seen double-digit increases. At this point, it's close to tripled in value in just a couple of months. Did investors miss the opportunity to buy, or is it still time to buy Lemonade stock? I'm Jason Hall. This is Investing Unscripted. We're going to take a close look at everything that's going on with Lemonade, the catalysts that have pushed the stock price up, and how investors should be thinking about the stock. Before we get into the details, though, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you really should go to our special link. You see it on the screen there. It's fool.com/unscripted. Go check out that special link and you can get access to the Fool's 10 best stocks to buy right now. Take the time, go check out that link. All right, let's start here. November 21st, stocks up 9.2%. Look at this week, 60% gains. Every day this week, the stock has gone up. Here's the thing. Lemonade didn't report earnings this week. You see the E? This is when Lemonade reported earnings. At the end of October, the stock is up 173%. Again, that's 200% to triple. We're not that far from a triple in basically a month. It has been an incredible run for the stock. If you're watching this video, you probably are well aware that might be one of the reasons you're taking a look. You own the stock. Do I need to be thinking about selling? Maybe you're thinking about buying it. You don't know if maybe you waited too long. You've missed the opportunity. Let's go back a little bit. I want to talk about earnings first. That was the beginning of the run up. But this week, we've seen the catalysts that have really sent it skyrocketing even further. I want to go back here to the shareholder letter from Q3 and talk about a couple of key things. I've done other videos where I did a deep dive. Go back on the channel and look, and you can find videos where I cover this in a little more depth. I'm only going to spend a minute or so on this. First thing is the growth rates are really good. They're spending a lot of money on marketing and customer acquisition. That's paying off. 17% increase in customers. You combine that with the growth in premium per customer. They've expanded the business and added auto insurance and homeowners. The premiums are getting bigger, so the numbers are getting larger. So in-force premium, it was up 24%. That's great. 73% gross loss ratio. This is what I really want to focus on. This is in the range of their long-term goals. What does this mean? It means essentially that 27% of the premiums were left over on a gross basis. It's not the combined ratio, which includes all of their operating expense. You can almost say their gross margin was 27%. This is great. This was a huge catalyst post-earnings. Like, okay, these guys are figuring out how to do the insuring part, because you notice these higher rates. It has been pretty ugly over the past couple of years. Management has started to live up to their promise. This trend is super duper positive, particularly considering that they're still growing so much. Now, the big question, we know this was earnings and then the election, a lot of stocks have done pretty good, but what has happened here that has continued to send the stock up? In the past 3 days, we've seen these big jumps continue to happen. What are the catalysts that are driving the stock up? Something that we saw yesterday, Bob Wong at Morgan Stanley, upgrade Lemonade stock to $44. This is the high price target. That is a big catalyst that's driving the stock higher. We've had other analyst upgrades that have come in. The average price target has moved up substantially. It's about $28 now. That's a pretty big deficit between where the stock is now. Broke $50 today. There are a lot of analysts that still have much lower targets. The lowest is 15. So we see a wide range of outcomes. But the point is that we're seeing that price target from analysts has steadily started to move up, has moved up a ton since the company reported earnings. We see analysts saying the results, particularly this right here, while you're also continuing to grow your in-force premium and your customer base, we like those things. We think the business model is starting to deliver. One more chart. This is another thing that I think is a big catalyst that is sending the stock higher. I think we have a classic short squeeze that is going on. What's a short squeeze? That's when you have shorts, people that have literally sold the stock short. They borrowed it from a shareholder and then they've sold it short. The idea, they think the stock price is going to go down. So they're going to sell it short. The idea is the stock price goes down, they buy it back and they make a profit. If you short a stock at $30, for example, and the stock drops to 20 and you buy it back, the difference between that 30 that you sold it for and the 20 you bought it back for, that's your profit. The risk, of course, if the stock goes higher, you have to buy back at a higher price than you sold them for, right? So this is the percentage of shares outstanding short. It was about 22% of shares outstanding sold short as of the most recent reports. That's a lot. For perspective, NVIDIA, about 1% short. There's a concern that NVIDIA is overvalued, but even it only has 1% short. I'm going to add percent of float short. Lemonade's got a lot of inside ownership. You got a couple co-founders that are still involved in the business that have a pretty big economic stake. The shares held by those inside owners they're not really available shares. They don't really trade. That is a massive, massive amount of float. I think what's happening is stock prices going up so much. You got the good news from the earnings. You got some good news from Bob Wong with that $44 price target. So you have all of these catalysts for the business and the stock price both that are causing the stock to rocket higher. Business results are better. They're executing on their thesis pretty well. Analysts are responding positively. Investors are responding positively. Money's running in to buy these shares. You're a short, you see this happening, and you're like, man, I've got to reduce my short exposure. Even if you think the business long-term is still a short, margin things are going to come in, your liquidity gets squeezed. So there's a lot of reasons why as a short seller, you're like, I have to reduce my exposure here, even if it means taking a loss. The mechanics of closing a short position, you're buying shares. So it's still a bullish action for the market. The market sees more buying, and that buying drives the price up, right? So that's what's happening. I think a big part of what's rocketing the stock up is the short selling, getting squeezed. So shorts closing their shorts or reducing short exposure on top of bulls that are going into the stock. So you got those two things that are happening at the same time. That's like rocket fuel for the stock price. That's the mechanics of it. We know what's going on with the business, all the positive stuff there. Analysts seem like they're starting to like it more. The big question, is it time to buy or sell in terms of their quality of their underwriting and their growth rates and all that kind of stuff? There's some questions about whether that's going to continue because, first of all, the entire insurance industry has pulled away from a lot of markets that are tough, and we've seen underwriting across the industry improve. It's great that we're seeing that also happen with Lemonade. But the question is, are those just industry tailwinds, or is Lemonade going to be able to continue that trend of quality underwriting no matter the broader trends across the market? There's still risk there with Lemonade that investors need to keep in mind. Now let's make the bullish case. If your thesis is that they've solved their biggest problem, which is underwriting, they're pulling the right levers to continue to grow, they're leaning into their strong balance sheet to continue growing while underwriting well to get to scale where the cash flows just continue to grow and the business continues to get stronger. If that thesis continues to hold true, then there's a lot to like even at these prices. We have a market cap about 3.6 billion compared to the large players. Still a small company. Trades for more than 2 times the book value of its assets, $1.8 billion. That's expensive for an insurance company. But this is an insurance company that's in a high growth mode. And if the performance of the business is indicative of their future path, then there's a lot of room to grow. $900 million in insurance policies. That is tiny for an insurance company. So the thesis is you're paying about 4 times the book value of their insurance premiums to buy the stock today. The idea is if the thesis continues to play out, they continue to execute on the strategy that they've shown that they can execute on recent quarters, and they continue to take market share and grow and expand while continuing to write profitable insurance, I think even these prices are reasonable to pay. I also think at some point this short squeeze is going to run out of steam and the stock price is probably going to come down. I'm not selling because of that. In full disclosure, I've got some covered calls out there that may be called away, but I'm not actively choosing to sell any of my shares at this price, as tempting as it might be. Because thinking long-term, 5+ years for this business, 10 years down the road, if it continues to develop, this $3.6 billion company could be a $10 billion company, a $15 billion company. I think it really does have that potential. That's why I've continued to hold. This run has been remarkable. I think the long-term potential is still there. There's a lot of risk in the short term. This is not a time to load up. It's maybe a good time to start a position. Certainly a good time to watch really closely for when this short squeeze maybe starts to run out of steam. Maybe add to that position once we see the stock start to come down. Again, assuming no bad news from the company or problems of the company, play the long game with this company. And I think investors can still make money with a stock at $50 a day over the long term. In the short term, there's a lot of risk. There's going to be a lot of noise. Hang in there tight. Be disciplined. And this can still be a long-term winner from you, even from these prices.